Hey there, this is Christian from Tribeca Trade Group with your end of day recap for Monday the 15th. And it is the 15th of the month, and equities rallied pretty nicely today. Small caps led. The reason why I'm saying it's the 15th of the month a couple times is because sometimes you do see portfolio managers allocate some money around the 15th of the month. So we see that on the first, we see that on the 15th, and sometimes we see that at the end of the month, depending if it's quarter end or month end or something like that. But I think that also that if you're looking for reasons for the for the market moving higher, I think that could have been a contributing factor today. But we'll go through some of the charts and we'll go through some of today's option activity. And you hear a lot of people on TV, on financial media. I always have one ear kind of on CNBC or on Bloomberg, and you just seem to hear a lot of people who are having a tough time grasping that the market is going higher. I think a lot of people are very, very focused on headlines and not really understanding what's going on in the market, which I think anyway. I've got my own view on the market, but hearing people kind of get frustrated and they're like, I don't understand why the market's up here. It's a complete, and you hear this over and over and over. And I think a lot of the people who are making these conclusions are not looking at what's going on with the rest of the world. So they're very focused on just domestic markets, and they're focused on the S&P, and they're focused on the Dow, which I don't know why anybody still looks at that index. It's not really representative of the whole U.S. market, but that's a whole other story. But I mean, you look at the green that's going on in the China, the Hang Seng continues to rally. The Kospi continues to rally. India continues to rally. Singapore continues to rally. One country after another after another. And I know, a lot of these guys who are on TV are not focused on international markets. They probably have never, they've probably never traded them before. They don't know how to trade them. They don't know where to look. But that's basically what's going on. And if you look at the performance, like for example, India up 25%, our markets are up nicely. They're up 7, 8%, but we are really underperforming the rest of the world. I mean, look at just this one page. Look at the year-to-date performance and look at how much the US is underperforming. So I've talked about this before, but it just doesn't seem like you have the same guys that are on CNBC saying the same thing. Oh, I don't understand. There's tensions with North Korea. Listen, there's always been tensions with North Korea. There's been tensions. It's just the media is focused on it. So until something happens, and that's why a lot of times when they interview people from South Korea, they're not like running for the hills. This is something that has been going on for years, and it doesn't really disrupt their lives. So our media is very focused on it right now, and they're reporting every time that they test a missile. I mean, how many times, have you ever heard like back in the 70s or 80s, every time that somebody tested a missile every week? So I just think you have to really be careful what the media is playing to. The media is trying to make the most out of politics, and the if I could borrow from somebody, I think it was Josh Brown who was on CNBC's halftime show. He was saying that people are investing in the CEOs. The CEOs, Tim Cook, Zuckerberg, these are driving the market. The companies are driving the market, not politics. So and the reason why I bring this up is because you want to just respect price and not so much these headlines that everybody is focused on, and these traders who are walking the empty floors of the New York Stock Exchange, I guess, are focused on. But that's not what drives markets. Companies, the numbers that companies are putting up. We just got through the majority of earnings season. Of course, the retail results have been weak. People are not shopping anymore in shopping malls. They're not doing as much of that. It's a shift in behavior. But you look at some of these companies and what kind of results they're putting up, and it's very strong. So basically, I'm not a fundamental person either, but you basically just have to watch price. We have not broken any major support, so I continue to be long this market, and I will stay long until price tells me otherwise. Until we break something, whether it's the 50-day moving average, you have to draw a line someplace and say, hey, this is where I'm going to lighten up on exposure, and we're just not really hitting any of those. IWM was most concerning to me, small caps, and we didn't exactly close on the highs, but we're not breaking down here. You can see that purple line is the 50-day moving average. If we start to break the 50-day moving average in things, then I would say, okay, it's time to lighten up on some exposure. Maybe we've got a little bit moved to the downside, but we haven't done that yet. So I don't think there's until that happens, I will continue to play further long in the market. Or if I really see more of the bigger sectors in the market break down, then I will shift my stance. But we're not seeing that. A lot of the sectors that have been weak are less than 10% of the S&P. So sorry to kind of go on about this, but I just think that is what people are talking about. Today, very much, you had a couple pockets of strength. You had oil come back nicely. For me, I don't necessarily think that we need oil to go up for this market. I just think we it's nice to kind of get it off your screen when it's not breaking down. So the less that oil could be a distraction, I think the better it is for equities. So energy, the U.S. dollar was down decently as well again today, so that gave a little bit of help to commodities. Some of these beaten up areas like metals and mining, XME was up 1.1% today. Steel names, there is a steel ETF that is SLX that's trying to get back to the 200-day moving average. You can see right here, that's the white line on my chart. So definitely not an area that I really want to be jumping into or have a big exposure to, but kind of be interesting to see if it retakes the 200-day moving average. Steel, iron ore is still pretty weak overall, but then you go to some of the stronger areas of the market. They also outperformed, so it wasn't just about oil. There's no oil relationship in semiconductors. Look at the semiconductors, 52-week high today, up 1.1%. That's not bearish, and it has nothing to do with semiconductors really have nothing to do with whether or not Trump agenda goes forward. Sorry. Also, home builders. There was a little bit of data out on the home builders which was pretty strong. 52. I think that's at a 52-week high. Pretty close to it. If not, we do have some housing data that comes out tomorrow. That is both housing. I believe it's new home sales. Sorry, let me look before rather than guess. Tomorrow should be a decent day for housing starts and building permits. Those come out at 8:30 tomorrow. So we'll see what they do. But I have been long the home builder ETF. That's ITB. It's home construction, but there's more home builders in it rather than XHB. So we do have also Home Depot that reports tomorrow. That could maybe shake things up a little bit in some of these groups of stocks. Besides that, you had solar names that were really strong, up 1.1%. You had banks with a little bit of a relief rally. KRE was up 1%. Robotic stocks up 90 basis points. Material stocks up 87 basis points. So pretty strong there. Then also security names, of course, were really strong in the news a lot today. So Symantec, FireEye, most of these, the high was right around the open. I didn't really chase many of these names today. Cisco had a nice move today. That name was also upgraded today. So nice move by Cisco. That was a name that I was long about 2 weeks ago and dumped. So, and besides that, so that was really, I think, what the rally was about today. A lot of those kind of beaten up areas, as well as the performers, like the semis and the home builders doing very well. But the FANG stocks just kind of took the day off, which I think sometimes that's how it works. It's not every day that these names are going to see momentum. Google looks like it was one of the best performers. Amazon tried to go here today and got rejected right at the top of value for the day. That's right here. So really good to have these value areas. I was actually looking for a long in Facebook today. If you go to the hourly chart, you could see, right up here, if you go to the 1 hour chart, you could see in Facebook, just not ready to go yet. So tomorrow, I would really watch the 150.90 level. Broke out on 1 hour bar and then right back into the value area. So a lot of chop for Facebook. I don't think Netflix really participated either, or Amazon. So most of these names, and that's basically how it works. Every day these names are not going to perform well. I know that's where a lot of momentum traders or day traders are kind of look at every day, but especially when there's more interesting things going on, you have to be able to change your focus or shift your focus to a couple different names. In terms of option activity, I already mentioned Cisco. Snap was also there. They're both Snap and Twitter saw some nice call buying today. So it kind of has been retracing some of that move from earnings a little bit. Probably going to get into resistance here. So a nice clawback. I think a lot of people, a lot of the 13Fs are out saying that guys hold big stakes in these. Is that meaningful? Not really. No, they took a big loss. What do I care? I don't know. Um, but I think that's helping the stock a little bit. Also, what's more interesting to me is Twitter. Twitter, I've been long in cash since the break of the 200-day moving average. I also put on a little bit of options. There was a nice play in Twitter at the end of the day. These were the June 20 calls. You can see the 19,000 and 8,000 of them were swept. So nice play there in Twitter. A couple other, Chinese internet names, which have been at this point they're pretty overbought, but they did see a little bit of attention. Names like Momo, small calls. They do have earnings this week, so it could be a little bit of a play on earnings. We saw a little bit of Baidu calls go up as well. We saw this is the second time we've seen this MTSI name. Um, this is another semiconductor name up 5.6% today. So not a lot of liquidity in the options, but what a nice move. If you stick with all the M's in the semiconductors, Marvell was really strong today, up 3.7%. We also saw some Maxim calls go up as well, 52-week high in Maxim. Remember when this thing reported earnings, it was a little bit of a dud, but some of these secondary type semiconductor names are doing really, really well. And then I would be remiss not to mention Nvidia too, because that just continues to beast from the earnings play. And another 52-week high in this one. AMD also acting pretty well as well, but again, sticking with those names and the M's that we just mentioned, really, really strong. Also, Applied Materials, you can just kind of go through the list. Applied Materials, really, really strong. Broadcom, also 52-week high. So, this is where the strength continues to be in the market, and really nice performance there. Just to kind of round out the option activity, Coca-Cola, real nice November play. I've been long Coca-Cola since the break of the 200-day moving average. Real nice play there. Skechers, also a chunky play. So you could see there was a lot of other option activity. So I just wanted to keep it with the biggest trades of the day. So that's a recap for the day. Have a great evening, and I'll see you guys back in the Tribeca Trade Room bright and early Tuesday morning for those housing numbers at 8:30 in the morning. Thanks, everybody. Have a great night.